Hello, everybody, and welcome back to the podcast, Builders, Brokers, and Beyond. I'm your host, kmashek, and today I do not have a guest with me. I am actually going to talk a little bit about what I do and inform you of a few new products that we have that might be beneficial for you this year in 2026. Um, again, Kim Mashik. I have been a mortgage broker for going on 6 years. I've always been a broker. I've never been on the retail side. And I guess a little bit of background of me as well is I have an accounting background. And so obviously I love working with numbers. And this led me to where I'm at today. I wanted to inform you a little bit on the difference between a mortgage broker and a banker because I've helped so many people who are always like, well, I got denied by the bank, so what can you do that's any different? Well, there's a huge difference there. A broker shops out the best options and deals for you, meaning we don't have just one rate sheet. We don't have just one rate to offer you. And in fact, if you don't fit in the box, as we call it, with your conventional FHA, VA, and USDA loans, sometimes you can't get a loan if you go to a bank or retail, as we consider that. What we do is figure out what your situation is, figure out what your goals are. Everybody's are not the same, and find the best deal for you. So, especially if you are self-employed, maybe you don't have 2 years history of employment in the self-employed realm of things or as a business owner. We oftentimes don't need that. So don't always think that just because you got a denial at a bank that you can't get a loan and purchase a house. We also offer the down payment assistance side of things and a whole gamut of options for you. I have over 300 lenders, in fact, that I can shop out. And I also don't just do residential, I can also do commercial. So if you're looking to buy a commercial building, refinance one, maybe get an SBA loan to help you get your business started, reach out. I'm sure that I have something for you. On the flip side of that, though, now that we've kind of gone over banks and wholesale, also I'd like to say that I am available evenings and weekends as well. So most of the time, if you're dealing with a bank, you may not, I'm not saying you can't because I don't know how they operate, but you may not be able to get a hold of somebody on the weekends or, when you're actually shopping for your house. Maybe you decided spur of the moment that you want to go look at a house on a Saturday. Uh, Call me up. I can probably get you a good idea on what you'd qualify for and if you could possibly qualify for that house before you actually go shop and get yourself excited about something. Um, Flip side of that, I wanted to talk to you about two different programs that we had. One of them is brand new for us, anyways. The other one is fairly new, but it's comparable to something that you're already probably familiar with. The first one I want to talk about is the physician's loan. This is a great loan program for anybody who is a physician of any kind. It doesn't have to be just at a hospital, but your veterinarians and RNs and all of that stuff. We now, well, coming soon in a couple days here, as of the recording of this podcast, which is the start of April 2026, we are going to be able to offer that directly, 100% financing for you if you are in the physician field. Um, there, with that said, 100% financing, there will be no MI. So no mortgage insurance will be given to you. And these are going to follow kind of the same guidelines from the sounds of it of conventional, including rates, which is odd that you don't have to put 20% down to avoid mortgage insurance. But this program in particular, through this particular lender, others may follow suit, others may already have it, but the guidelines could be a little different. This one in specific is 100% financing, no mortgage insurance. They can use future income. So, like maybe you're just getting out of school, or maybe you're getting ready to change to a different hospital or a different organization, and your income is going to go up. We can qualify you off of that. So, and we can go up to $2 million on the loan side of things. So you're not capped. We can also offer ARMs on this. So maybe this won't be your forever home. And I can discuss ARMs. I think I have podcasts, not a podcast, but I have a video in my stream of videos teaching you about mortgages, about ARMs and what that actually means. But we can offer 5 and 7 year ARMs if you are familiar. We can also do refinances on these type of loans. So purchases and refis. You have to have at least a 680 FICO score. But if you have 680 or higher, we can absolutely do this for you. 50% debt to income ratio, so that's pretty comparable to a conventional approval. And it's only for one unit though, so you can't be buying a multifamily duplex, anything like that. Right now, it is just for single family homes, one unit. I'm not sure if they're offering that on condos yet, but more than likely, if they aren't out of the gate, they might, consider that down the road. Gift funds are eligible. So if you can't cover your closing costs, because that still will be a part of this purchase, the 100% loan to value is only including your down payment. So you will still need closing costs covered. You can use gift funds for that. So you don't necessarily have to come out of pocket with that if you can't, and you have a family member that might be interested in giving you that. We can allow that. A lot of this does not require many reserves. So a lot of your purchases are going to require reserves. Down payment assistance, typically not as much, but most other loan programs, they want to see that you have something in the bank that can potentially cover your month or two of mortgage payments. This one is 0 to 3 months. So again, it just kind of depends on your full application portfolio and what that looks like in order to determine if it's going to be 0 months or 3 months. But still, 3 months is not that much to have in the bank in order to get 100% financing on your house with just closing costs covered. So that is pretty cool. Um, let's see, I think that's all I have on that one. I did want to bring up the fact about building. So perhaps you are not liking what's on the market. You're tired of competing because a lot of times we're out there and you're making offers on homes and you lose the deal because maybe somebody offered cash or you just got outbid because maybe your approval wasn't as high. Um, a lot of people turn to new builds, to builders, or whatever the case may be for that. We have a one-time close product, which I also have a video on explaining it a little bit more detail, but where you can purchase your land, you can do your construction loan, as well as having it rolled into permanent financing with one credit pull, with one set of closing payments, closing costs, and one closing. So you typically have 10 to 12 months to close on those, or I shouldn't say close on those, to finish the build on those. The closing itself is about the same as anything else. It's 30 to 60 days, and the 60 days is only if your builder is not approved already. So keep those things in mind. If you're tired of fighting the fight and trying to win the offer, maybe look at building your own. The other side of that is the bridge loan. I know you hear bridge and you get a little, "Ugh, I don't want to do that. I've heard bad things. I'm going to be upside down on my house. Um, I don't want to make those payments because it's going to hurt my debt to income ratio for my purchase, for my new house." Well, I have good news for you. That is not the case. There are still lenders out there that have bridge loans where you are going to be hit with a monthly payment. It's usually interest only, but I have a couple lenders who do not require that. So you aren't making payments on your old mortgage. So you can take that completely out of the equation. And what does that do for you? Well, it increases your purchase power for your new home that you're wanting to move into because you do not have that mortgage payment. We can omit it from your liability section when we're doing your approval. The second thing is you're not making a payment behind the scenes either. So these bridge loans, these newer ones, are interest only, but that interest only payment rolls into the back of the loan. So they can, most of my lenders can lend up to 75% the value of your house and what you're planning to sell it for to utilize for the purchase of your next home. That helps you not be upside down in it. And also, that's why you have X amount of time. I think it's 6 to 9 months is common. You can get extensions on those for up to 12, I do believe, with at least one of my lenders. But they kind of have that calculated in, and that's why they do the 75%. So you are not going to be upside down in your house. You're not, if you go that full 12 months, you might not get a whole lot of money for your net proceeds once you sell, but you're not going to be upside down. You're not going to owe anything. And the cool thing is, like I said, you're not having to make that extra payment. So don't let bridge be a scary thing for you. They are not. They're actually very cool. The interest rates are not amazing. I'm not going to lie about that, but it's going to get you equity quickly. So you don't have to make a contingency offer. You don't have to accept that first lowballed offer on your house because you fear that you might not get it sold and therefore might not get the next house that you want. Those two pieces are huge when you're looking to buy a house. The other thing is, you can take your time moving. You can purchase your new home in 30 days. Don't make a contingency offer because sometimes that hinders people from actually accepting your offer and allows you to move out at your will, at your convenience. So you're not having to quick up and move your stuff. You can move slowly and take your time accepting the best offer for your current primary home. Those two pieces are huge. And like I said, you're not making that extra payment. So you're not having to strap yourself thin for the next, you know, 3 to 6 months while you're waiting to sell your house. Depending on how the market is, that can be a huge, huge, huge deal for you. The new thing that we have that's very similar to the bridge loan, but people tend to find this word a little less hasty, I guess I'll say, is a HELOC. Yes, I can now offer you a HELOC on a home that you have listed for sale or will soon have listed for sale. You can take out up to, I think this one is 75% as well. I'll have to double check on that. It's 75 or 80. Let's just say 75 to be safe. This payment you will be making a payment on this one, I do believe. Um, Unless they changed something on me since I last looked. But you can get up to 75% of the value of the equity that's in your house to purchase your next house. Have it listed for sale already or listed the very next day and utilize your equity that you've been working so hard for in your current primary. HELOCs typically are not able to do this. If you end up taking out a normal HELOC, you typically have to have that for 6 months, 3 months, whatever the lender's stipulations are, before you can pay that off without a penalty of some kind. So this particular HELOC, as far as I know, is only offered by one of my 300 plus lenders. So it is very new. It is very cool, unique product. So if you hate that bridge name, you hate that bridge idea in your head, we could still do a deal for you and get you out of your current primary into your new home without a contingency offer. So keep those things in mind. Um, those are the primary things I wanted to talk to you today about. I know the market is kind of a little bit all over the place today. Rates have gone up a little bit since the beginning of March. They came down quite significantly, which I was super excited for. We were in that 6.125 mark, where we're now closer to the 6.75 mark. So we took a 0.5% jump in rates, which is unfortunate, but guess what? We're still below where we were before the COVID times, which again is not a common market. We may not see those twos and threes again, so don't get your hopes up and stay on the fence on buying a house because of that. We just might not see it. And right now, I keep telling people is a spectacular time to buy because there are a lot of people on the fence and there are a lot of people who are waiting for those rates to drop. Another thing I want to remind you of, what happens when those rates drop? Purchase prices tend to go up because one, sellers know that they can probably get it. Two, they go up because people are fighting for the house. You have bidding wars that start to happen. So where you might pay 400,000 today at a 6.75% rate, and I wish I had this filled out on a spreadsheet so I could show you the difference. But if you want to see that, hit me up in the comments or hit me up via email or phone. I'll have that in the description and I can show you. If you're buying a $400,000 house today at 6.875 and you wait because you want those rates to be back down to the 6.125 or even into those high fives, you might be paying up to 500,000 or more for that exact same house. What does that do to the monthly payment? It puts you about the same as where you'd be today. So don't sit on the fence, don't wait. get that house of your dreams without those bidding wars, without that extra price for the purchase of the home. And you can always, always, always refinance down the road if rates tend to drop. Or get yourself into an ARM. If you get yourself into a 5 or 7 year ARM, you can have those lower rates while you're waiting for those rates to potentially drop. And if they don't, well, then you fluctuate with the market. But there's also buy down options. So that's not buying down the rate, which is a permanent 30-year fix. It's called a buy down. I do have a video in my list of videos in my YouTube channel here that you can go find and you can figure out exactly what that means. I'm not going to get into it today, but I have it all broken down for you in another video, and I can link that. I can send that to you if you can't find it. But that's really all I have for you today. I just wanted to fill you in on a couple new products, and I apologize for this little lovely thing here. I had a fight with a board while I was helping my husband fix a shed. So sorry about that. But work hard, play hard. Thank you so much for tuning in, guys. And if you have any questions at all, feel free to hit me up. I am always available, evenings, weekends. If I don't answer, I might be asleep, but if I'm not sleeping, I will answer your call. And if not, I'll call you back first thing in the morning and we can get whatever questions you have figured out. Whether you're ready to go now or you're ready to go in 6 months or 12 months from now, chat with somebody like myself and get yourself lined up and on that right path to buy the house of your dreams. If your credit's low, we can help you get it higher. If you just need assistance on maybe what to do to get your DTI, your debt to income ratio better, hit me up. I'm happy to walk you through it, give you advice, get you lined up. So have a wonderful day, and I will see you next time.